Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The sensex and the nifty declined for the fifth session, marking the longest losing streak in 8 months. The sensex loses over 130 points, more than 7 lakh crore rupees of investor wealth wiped out in the last 5 sessions. Adani stocks continue to be under pressure, with the group losing 20,000 crore rupees in market cap today. A CNBC-TV18 analysis shows LIC sold 10% of its Adani holding in January this year, and its investment in the group has turned negative as of today's market close. Zee Entertainment moves. The NCLAT seeks a stay on insolvency proceedings after the NCLT admitted IndusInd Bank's plea. A statement from Puneet Goenka's office says he's taking all necessary steps to protect the interests of stakeholders and achieve a timely completion of the Zee-Sony merger. Finance Minister Nirmala Sitharaman meets U.S. Treasury Secretary Janet Yellen ahead of the crucial G20 meeting in Bengaluru to discuss perspectives on strengthening multilateral development banks and global debt vulnerabilities. Yellen says the U.S. will make it clear to the Chinese government and companies that provide material support or assistance to Russia that this will be a very serious concern. Relief for former Jet Airways chairman Naresh Goyal and wife Anita. The Bombay High Court quashes a February 2020 enforcement case information report against them in a money laundering case. The Goyals had moved the High Court seeking the quashing of the ECIR. The Supreme Court grants an interim bail to Congress spokesperson Pawan Khera after he was deplaned at the Delhi airport and arrested for his comments against Prime Minister Modi's father. FIRs have been filed against him in Assam, Lucknow and Varanasi. The Apex Court has also issued notices to the Assam and UP police to club all the FIRs. Reports of shelling in southern Donetsk in Ukraine ahead of the first anniversary of the Russia invasion. Ukraine claims to have repelled 90 Russian attacks over the past 24 hours. Well, starting the market action, a volatile day saw the Lal Street closing the session flat. Markets down for the 5th straight day, posting the biggest loss that we've seen since June of 2022. Now, the Nifty and the Sensex failed to hold on to the intraday gains, ending mildly in the red. The broader markets fared slightly better. The BSE companies have erased a market cap of over 7 lakh crore rupees in the last 5 sessions. For the series, the Nifty lost 2% to record its biggest fall in a series since September. Surabhi joins us now to wrap up the day's trading action for us. Surabhi, continues to be weak for the markets.
Well, this is a market that seems to be in no man's land. Nothing is moving it. The bulls will, however, see this as a sign of relief, considering the huge drubbing that we saw yesterday in trade. Today was a very cautious session right from the word go. The market was trading in a very narrow 120 to about 150 point trading band. We did have the monthly expiry played out, so there was some volatility around 3 o'clock, but net result is that we've closed at the flat line with absolutely no sense of direction whatsoever. The talking points continue to be the same: direction of interest rates and whether the RBI will hike again in April, what the Fed is doing, rising bond yields in India and obviously internationally, and that's really keeping a lid on momentum. Let me quickly come down to today's movers and shakers. So there was some shine in the metal side of the market, actually metals and commodities. So you had stocks like Hindalco, Tata Steel, a little bit of green on an ONGC for that matter during the course of the day. So some of these names were active. Then you had a couple of the banks that started to come back in towards the close of the session, and that prevented a wider fall. So names like Axis Bank, SBI, Kotak Mahindra Bank, they pretty much sort of held the floor for the market, if I could say that. And then there was, of course, the stock that has been the star of 2023 after being the star of 2022, and I'm talking about ITC. Lifetime highs today for the stock. Once again, it's inching closer to the 400 mark, and that gave some respite to the bulls. But then pressure on the other side. The trends are very unclear, and a lot of the heavier stocks like Reliance, HDFC Bank, they continue to see selling pressure today, and there was not much clarity. Broader markets, well, really it's extremely stock specific in terms of the action. For instance, a Sonata Software today, where the company's gone ahead and done an acquisition, that was in focus. Zee was in focus because of all the ongoings at the NCLT in the company, then challenging that at the NCLAT. Stock was down 15% at one point in time, but then closed with a cut of just about 3 to 4%. So it's extremely stock specific. There isn't a momentum play in this market. And for what it's worth, I mean, the market's really searching for triggers and a sense of direction that doesn't seem to be coming right now.
Surabhi, many thanks for joining us. And there is no respite for the Adani Group either. 8 of the group's 10 listed entities ended in the red today. Adani Total, Adani Green, Adani Transmission and Adani Power hitting lower circuits over the course of the trading session. The group has lost a market cap to the tune of 20,000 crore rupees today. And this takes the total market cap loss since the Hindenburg report was released on the 24th of January to around 12 lakh crore rupees. As of today, the Adani Group's market cap stands at 7.4 lakh crores. Now, the value of life insurance corporations' investment in the Adani Group has turned negative. An analysis by CNBC-TV18 based on public disclosures by LIC shows that the insurer has sold 10% of its holding in January this year. The Hindenburg report was released on the 24th of January. The LIC chairman, M.R. Kumar, told CNBC-TV18 that Adani shares have not been sold since the report was released. But as things stand, LIC is sitting on losses of 234 crore rupees on its Adani investment to date. Moving on, here's the action from the commodity market. Crude oil prices continue to trade in a range. Prices have seen some recovery after 6 days of losses. Concerns over potential interest rate hikes by central banks and a build-up in crude inventory weighing on sentiment. But back home, the big corporate story. Zee Entertainment has now moved the NCLAT seeking a stay on the insolvency proceedings. Yesterday, the NCLT, on the back of IndusInd Bank's plea, allowed the initiation of insolvency proceedings against Zee. Lata joins us now to explain what this could mean for the company's proposed merger with Sony and what legal experts have to say. Lata.
The company Zee Entertainment had no option but to go to NCLAT because the NCLT process has to be stopped. They have to get a stay. If the NCLT process runs, then the promoters and the management are taken off and a committee of creditors will take over the company, which obviously they don't want because they have to run the company and conduct the merger. Now, what are the chances that Zee will get a stay? The chances, according to legal sources, is good because the loan in dispute is not something that Zee has taken from IndusInd. Apparently, what Zee has done is, Zee is itself almost debt-free. It has given a comfort to IndusInd in a loan it has given to its old group company, City Network. And the loan, in technical language, arrangement is called Debt Service Reserve Account. And apparently, the comfort that Zee gave was that it will always ensure that in that account, 1 quarter's interest and principal is maintained. But then City Network became an NP. It defaulted. And now IndusInd is asking Zee to pay up that money because it gave that comfort letter. It is seeing it as a guarantor. Zee has taken IndusInd to the Delhi High Court where it is fighting that case. So chances are Zee will tell NCLAT that this is actually a loan in dispute that IndusInd is trying to take from them, and therefore this NCLT petition should be quashed. Now, does NCLAT have the right? There are precedents that NCLAT can take such a view. The Supreme Court in the Vidarbha Industries case had said that NCLAT can, or for that matter even NCLT, can decide whether to admit a case or not on the merits of the case. And here Zee has a good chance of saying that this is a bad case in the first place. The other things that apparently Zee can bring forth is that the claim was made by IndusInd during COVID, and at that time many of those cases were not allowed because of the COVID period. So the case is not even maintainable. Zee can also argue that when NCLT pronounced the judgment, it had not allowed Zee to make a case. It had only taken written submission, not entertained them in person, and therefore procedure was not followed. According to legal, Zee has a good chance of getting a stay, but until the stay comes, you can't be sure.
Yes, we cannot preempt what the NCLAT may or may not do. Lata, many
yeah, Shri, apparently
yes,
even the amount in dispute is only 83 crore, we are given to understand.
All right, we will be tracking that developing story. Lata, many thanks for joining us. Now, Bengaluru is playing host to the first major G20 event under India's leadership. Finance ministers and central bank governors will be in a huddle to discuss several issues that plague the global economy. India's Finance Minister Nirmala Sitharaman met with US Treasury Secretary Janet Yellen today. Yellen addressed the media earlier, asserting that the support for Ukraine is her top priority. She also spoke about working with countries to avoid export restrictions on food grains. Yellen also spoke about the stress being faced by many emerging economies and called on China to help restructure debt for countries like Sri Lanka, which are struggling to stay afloat.
I will continue to push for all bilateral official creditors, including China, to participate in meaningful debt treatments for developing countries and emerging markets in distress. I will also be discussing international coordination on debt restructuring for middle-income countries.
Well, that is the U.S. Treasury Secretary Janet Yellen, and Parikshit Luthra joins us now live from Bengaluru. Parikshit, meetings underway. In our conversation with the World Bank President David Malpass, he was hopeful that there could be a positive outcome as far as the debt resolution matter is concerned. What are you picking up from the conversations that you've had?
Well, the conversation around debt restructuring is bound to be a tricky one, a sensitive one. We believe that no proposal for haircut is acceptable to China. In fact, China is urging other nations to urge the multilateral development banks to take a haircut as well. So there seems to be a deadlock on that front. We believe that discussions on the communique, the G20 communique, will go on till late tonight. There are some meetings which are also taking place at 1 a.m. where central bank governors, finance ministers are participating. So you can understand the sensitivity around issues like debt, sensitivity around issues like Ukraine as well. So Secretary Janet Yellen, while she was addressing the press a short while back, said that building support for Ukraine and highlighting the economic impact of the war will be her #1 priority. But whether the communique names Russia in the statement, that remains to be seen. Seems very unlikely because G20 works with consensus. There are two major meetings going on currently as we speak. And let me also add that all major central bank governors of G20 nations are here. We also saw the Fed chair, Jerome Powell, here a short while ago. He was going into another meeting. There are discussions ongoing on the cryptocurrency framework as well. There is a discussion going on payments infrastructure, cross-border payments, and also generally about the state of the global economy. So let's see what the key outcomes are. Nirmala Sitharaman has a packed schedule. She has at least 10 meetings, bilateral meetings, over the next 2 days.
Yes, it is going to be a packed schedule for the finance minister, and we will keep coming back to Parikshit for the latest there from the G20 meetings underway in Bengaluru. We will head into a break, but up next, an Aon survey highlights that salaries in India are expected to increase by 10.3% on an average in 2023. That and more when we get back. While you're watching Business 360, a survey by professional services firm Aon highlights that salaries in India are expected to increase by 10.3% on an average in 2023. This is slightly lower compared to the actual increase of 10.6% last year. The survey is based on inputs from 1,400 organizations across 44 sectors and also highlights that India continues to have the highest salary increases in the region and among major world economies like the US and UK. However, attrition numbers in India remain near 2-decade highs. There's been an increase in involuntary attrition on account of recent layoffs. Joining me now is Rupang Chaudhary, Partner and Chief Commercial Officer of India and South Asia at Aon. Rupang, thanks very much for joining us. Well, this looks better than one was expecting, given that there are still a fair number of uncertainties that we're dealing with, global and some domestic factors as well.
Hi, Shireen. Thank you for having me here. Yes, that's right. At 10.3%, I think the numbers continue to be double-digit for the second year running, and it is a little higher than what we thought it would be. I think a bunch of factors are at play here. I think some of the sectors that are strongly linked to the India growth story, focused on domestic consumption like manufacturing, real estate, FMCG, pharma, have done really well and have given sizable hikes as compared to previous years. And while the increments on some of the traditional sectors, traditionally high-paying sectors like IT, financial services, e-commerce, are a little lower than last year, but they're still in high double-digit because the attrition numbers continue to be very, very high in those sectors. So I think it's a bunch of factors at play here. One is the overall business sentiment, which is coming out very positive, very high attrition, and some of the sectors which have struggled to pay in the last few years, which are largely linked to our domestic spending and consumption, are showing a pretty rosy picture on both the hiring as well as on the increment side.
You know, that's interesting that you talk about the kind of increments that even the tech sector is seeing, because globally what we are seeing is a significant number of jobs being cut across the tech sector. Here there have been cases where onboarding of new recruits has either been delayed or, the onboarding terms have been changed at much lower salaries. How are you reading what's happening on the tech side of things specifically at this point in time in India?
So if you were to break up the tech sector, if you look at tech products, right, the numbers are high, but they have been higher in the past, right? And they continue to still be at a fairly reasonably positive outlook. If you look at IT services, the numbers have fallen a little bit as compared to last year. So within technology also, we are seeing different factors at play. And again, the whole domestic versus the global phenomena of how aligned these sectors are at play. Attrition continues to be very, very high. And as long as attrition is very high in these sectors, because other sectors continue to shop from these sectors, the numbers end up still going up. So within the tech services sector, we are seeing a bit of a dichotomy, but we are seeing healthy increments still being given. However, they are not as high as what we had seen in 2018, 2019, 2020.
Yes, that is when the war for talent in the tech sector was at its peak. But Rupang, I also want to understand what you are seeing now across the hospitality, the aviation sectors as well. Because these were sectors that were impacted the most on account of COVID. And now we're seeing a revival and the demand for talent returning to these sectors. In fact, many are arguing that there isn't enough by way of people who want to join. What are you seeing there in terms of retention, in terms of being able to make this a lot more attractive for people to stay on?
So I think that's an important point, right? Because a lot of these sectors which were impacted adversely during the COVID years have actually sprung back and are hiring. So the hiring outlook for these sectors has gone up. The business outlook for these sectors have gone up. And as a result, salary increments also are higher than what we had seen in the last 2 years. And the projection numbers for this year is higher than for previous years, which is not what we are seeing for the globally aligned sectors. So be it automotive, be it manufacturing, be it FMCG, be it retail, be it telecom, be it cement, be it hospitality. All of these sectors are close to the double-digit numbers now. And these were all struggling in the 5-6% category during the difficult COVID years. So clearly there is a spurt. There is a strong demand for talent out here. A lot of these sectors are hiring talent from the IT sector, from the sectors which are not doing so well, because demand for digital and tech talent is across. It's in the traditional sectors as well. So, but clearly this is a big rebound and a big resurgence we have seen, which wasn't the case in the last few years. And this is certainly putting pressure on the overall number that we are seeing for India Inc.
Rupang, before I let you go, so on balance, the data and the trends do seem to suggest that we are still in a positive environment as far as the job market goes. At least I'm talking about the formal job market.
Yes. If you were to actually look at the estimates, the hiring estimates are going up. The business, so I mean, we track 3 broad parameters when we do the study, right? We ask companies about their business outlook, their hiring outlook, and their increment outlook. And all 3 are looking fairly good. When we're talking about moderate growth, not very high growth, but moderate growth, we are seeing almost 50-60% of the companies talking about a positive sentiment in each of these 3 sectors. But of course, there are other factors at play. But the fact is that as long as attrition is going to be high and the demand and supply of talent remains a concern, and inflation is also going to be high, I think we can expect fair amount of increments coming across in this year as well.
All right, so a double-digit increment, that is the expectation as per the Aon survey for this year. Rupang, many thanks for joining us here on CNBC-TV18. Appreciate your time and we wish you the very best of luck. That's it then on this edition of Business 360. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news will return right after this.